We are alive, ladies and gentlemen. At least I'd like to think that we are currently. It's great to see everyone this evening. Um, wow, isn't that fun? You know, one of the things that I learned during the pandemic was to always remember that when things seemed like the market was its grimmest, it was actually one of the most exciting times if you've been paying attention. Now, it's hard to internalize, especially if you do one of the also intelligent things, which is not to really fluctuate too much in your portfolio. Now, we went over a few kind of simple strategies in the past of what I like to do for taking profits, which is much more of a budgetary standard than anything, because portfolios, just like a house, are really designed for a long term time horizon, and also why we always kind of insist the idea that through repetition and time, that conviction pays off, and it's easier to manage as well. So, boom, this is we don't actually usually use aggregators like this, but I love CoinGecko. Shout out to Bobby Young. Hadn't seen him in a while. So we're going to take a look. Lots of red. And there's some really interesting parts of the conversation. I would first like to apologize to the Arcane Bear family member, if I did in any way, who I told was wrong about Luna and UST. Most of the algorithmic stablecoins have failed in the past. And we saw this one largely blow up today as well. So I actually, hold on, while we're here, let's take a look. We'll go to Luna specifically right now, but back at $33. It's a significant hit, biggest loser of the day. And let's take a look at UST as well. Where did we drop to for that? 78 cents. So one of the things that I thought was detrimental, even though I was kind of hoping they were a bit better at placing multiple things within the basket. Clearly, if you have too many volatile anythings in a basket of assets, pretty much all the algorithmic stablecoins have failed at this point. Maybe I was a little bit too hopeful of their treasury management. Nonetheless, we'll see what happens, but it's not catastrophic, and it's definitely not catastrophic to this ecosystem. That's, I think, a plain and simple truth. It was a big moment, and we had, I think, hoped better for the stable coin predicament that we are in, effectively with USDT and USDC being these guiding lights and indicators, when a large part of how we got to this conversation was the fact that Bitcoin is more of our guiding light. It's kind of our currency and our money anyways. It's a volatile currency, but at least over the long term, it's been volatile to the upside. And that's great. It's not a great stable coin. So what do we refer to? The US dollar, which technically isn't all that stable either. In fact, it's been losing a significant amount of value. Pretty much for the last 100 years, been going down and down and down, which is largely what seems to drive up prices and all through the inflation of the monetary supply. We've gone over this a bunch of times. But just for reiteration, let's go take a look. And I kind of wanted to go over the whole thesis here, because I think people should largely be calm. I don't see too many choices out of this road. And in the past, at least the known history I can see for the dollar, they do the same thing. They always fold and turn back. So we almost always include the DXY into our thesis. It's peaking out. It's not to say it couldn't go higher, and we don't see too much of a lower low on the RSI here, so no bearish divergence quite yet. And then when we look at the S&P 500, actually I was looking at the NASDAQ. Okay, I was looking at the NASDAQ earlier. Yeah, I was looking at the NASDAQ earlier. Where are we here? And it's actually quite exciting. You gotta remember the importance of some of these changes in culture. Like, where is it? Where is it? I see. There we go. A NASDAQ composite. Okay. What I wanted to do here was show the length of the time frame. I'm gonna have to go to the weekly here to get some context. Yes. Okay. So here's the NASDAQ since 1997. And the first kind of like .com blow up and crash, subsequent crash. Notably here for the NASDAQ, effectively, the 2008 decline was basically negligible. It was almost non-noticeable. It was basically unimportant. It's a lot more noticeable in the S&P 500, which is another conversation. The NASDAQ is obviously built up of different types of companies. They were less affected by the 2008 collapse because they owned a lot more commodities within their like day-to-day basket, like land and actual like physical goods within their ecosystem, like a Ford car company type of thing. So this ecosystem has been largely held up. I'm going to get rid of this RSI here. It's not helping. There we go. The entire NASDAQ and S&P 500 has basically been held up by monetary inflation. That's what inflation is. Now, most people don't notice it right out the gate because they're not participants in the market, so they're not the net beneficiaries. They do notice it when it starts to affect the day-to-day prices of oil, wheat, and bread, and this type of rice, this type of thing, energy. But every time we've gone over, when we get to, well, here we go. This is on there. This is effectively between 2000 and today. On the far left-hand corner, this is the 2000s and where we are today. The NASDAQ has grown in lockstep with the monetary supply. So what does that tell you? This entire thing is held up by one thing only, and it's been that way before I was born, is what it appears. It appears that it's been held up this way since longer than I've been alive. Okay, so that's the first thing. That's a significant gesture, saying, okay, this is beyond generally an individual's lifetime, its ability to expand this type of idea. And what does that threshold look like? Now, this is the first time that we're getting into some type of parabolic growth. Look at the growth of the NASDAQ. Effectively, it's starting to go parabolic, right? This kind of straight up. There's a long ways down in comparison. So it's important to remember that right now there's a really big problem in the financial ecosystem, and it is the US dollar. So this idea of the UST I thought was always kind of ridiculous just by itself. Again, I maybe I was smoking too much opium about the algorithmic stablecoins. I was really excited about that, but maybe we failed in the concept that it shouldn't be called or related to the USD in any way. It's just bad trademark. Call it something else. Now, its ability to say somewhat stable in the ecosystem is probably easier to define. Anyways, I think part of the problem here is that we're relating too much off of a token like the US dollar that has an infinite inflating supply, and they can largely control it very easily. If they want to stop a SWIFT transaction, they can do that probably as easily as they could stop a USDC transaction, I guess. But nonetheless, it's possible. So US dollars does not mean you own whatever that US dollar is. It can largely get stopped within the bank account. So actually, Raul Powell had a great conversation with Bankless, kind of around like I guess in large, this whole conversation of this area is largely around ownership of anything, whether it's sovereign money, identity, or governance. Ownership of those three things is extremely valuable. Okay, so Bitcoin got pushed down significantly because of that, and we got one of the things we were looking for, a big supply test. We thought it would be a little bit lower than that, but hey, whatever. 29 grand is still holding up the floor that we think exists here. The reason why we think it exists is a larger thesis related to the three peaks in a domed house, but ultimately, this is what I was interested in. I wanted to see a supply test come back up to these previous ones. This one was a lot bigger, and it caused some liquidations, which is great. That's what we want. Makes the ecosystem more sound. It tests the bed of the growth of these things. It was one of the fascinating things about being in Bitcoin for so long. It's like you get used to it being ridiculously volatile and go, you know what? The best thing to do here is basically just always keep buying because it's volatile. And that's very confusing if you are attached to the emotional dollar over a short time frame. It's only easy to justify when you zoom out and you take a macro viewpoint. So even though we're on a small viewpoint here, I think it's important to recognize like the Bitcoin has only ever gone up. But so has everything else because of the inherent problem with the US dollar. And I think this is probably the larger part of the conversation everyone needs to remember. So my interest here is in how do you get money to be naturally adopted through people that are not just happen to be born in some geographical longitude and latitudinal place, whether it's with their passport or the money that they use. It seems abhorrent in today's age that we are still so we still segregate so much just by where someone happened to be born in between boundaries, and that this is largely, again, due to identity and money or currency or ownership of the things within that area. So, how you own IP, whether you can own land, this is kind of a big, hugely important conversation in how economies grow at scale. So, Bitcoin ultimately represents your ability to move throughout your investment thesis without too much trouble. There are countless times when you can go back and you can find the productive class becomes the target at some point along the way. There's a revolution. It overthrows some type of power, whether it's a democracy or a dictatorship. Things start to collapse and then they rebuild. That happens a lot. And you don't need to be you don't need to be too intelligent, I think, to go out of your way to read that, right? So most people out of the gate would understand that. Hey, look, this actually happens quite frequently. But what people get wrong is the frequency at which it might happen in their own lives. So you will read the history books and think, hey, look how many times this thing has happened. It's just not going to happen here. I live in this special little world. But that's not the way it works. Our interest here is largely when crisis starts to emerge, and this is what's happening. So I actually think this is we're in a really good spot. I think and I still think where we're going is ultimately much higher with Bitcoin here. When I said Bitcoin was going to $6 million and it was at $200, okay, maybe you could call me crazy, but we're not that much. We're not that far away now. We're a lot closer than we were then. And I think that understanding the nature of the beast, which is the dying US dollar and the failing of this global economy that a lot of people don't want to accept, or largely the net beneficiaries of, most people don't recognize the downfall of their society as it's taking place around them. It's the historians who write afterwards about it, usually who try to pinpoint the exact moment when it all happened. And anyways, I suggest I suggest that time be spent reading. I think Naval made a very good quote about like what makes a good investor, someone who spends enough time sitting down and reading or basically doing nothing. Because a huge amount of this is patience to see, can you find market trends, pick individual winners, build that conviction through time so that you're never at ultimate risk. You can do this in a number of ways depending on what your interest is. But yeah, all the way down to 29,000. A lot of people are going to be worried it's going a lot lower. Again, this is always one of the contextual aspects we try to write in, is that you need to be building a month-over-month budgetary investment strategy and effectively ignoring volatility. Again, every time we go back into the past and look at how this game works, it says the same thing. Effectively focus on accumulation strategies that you can repeat throughout time. Ignore the volatility and you pay off significantly higher than anyone who's trying to buy low or sell high. That's very difficult. It's very easy to say those things, and effectively, what I've done to mitigate that risk, and what I'll continue to do, is aim not at taking profits, but at covering multiple years of business expenses, and looking at my interest in how I generate revenue. I think most people should be focused on doing what they love and how that provides a value and service to their community. You can do that at any number of ways, because much of this so far, you didn't need to be super wealthy to make a lot of money. You just needed to be consistent. And I think that consistency is undervalued because people's emotions become totally illogical when they see these large price swings. And I understand. I've been there. I think that every new trader is going to do multiple things wrong multiple times until they figure out how they play the game, and that this simple thesis is actually what repeats the best results. It just doesn't look that way. Like I remember, buying Bitcoin at $1,000, watching it come down to $200, thinking, oh well, now Bitcoin's back at $200. Okay, but then as soon as it went to $300, $400, I got awesome excited again. So being able to measure time when you're new to an investor is really important. It's the only way you can do it is through consistency. So I recommend that. No different today. I still stand by the Three Peaks and Domed House thesis. I don't think we can go too much lower. I think that was pretty much got rid of almost all the leverage. And too bad about the algorithmic stablecoins. Yeah. Um, I like how people like Ga here are so vocal. They're the people that have always been hurt the most in the market and just don't understand how the game's played at all. It's actually really fascinating to see. Um, I think that mostly what throws people off in their inability to like logically think things through um, comes from the lack of education, probably. Look, it takes a lot of time to do research, and I know most people don't like doing it. But one of the fun parts is even though we don't come out with a perfect replication of what's happened in the past, like, this history seems to repeat itself pretty frequently with different faces, different names, and slightly different storylines there. But I'm really always surprised by the vocal, the vocal few about the misunderstanding and the large emotional dialogue that comes along with it, because it's kind of the centerpiece of a bad investor. Being overly emotional. Like, I'm actually super excited about this. This represents something fucking awesome. When the markets are down, it represents the greatest opportunity. And look, I think someone said it could go. They're like, oh, it's gonna go to eight grand. Well, okay. So here's a good part of the conversation. I see you guys chatting on the side over here. I'll take a shot at this one here. Short summary of the UST peg. Okay, so we had high hopes, and this is again where I'll definitely declare my hopium status. I was very excited about an algorithmic stablecoin backed, but I guess I didn't do enough digging and research. Although I myself was not using UST, so that this was not of any real regard to me. All the ones we've seen in the past have exploded. So this was, I guess by trial numbers. But I guess Elon Musk's rockets all exploded on impact before he figured it out. So we're kind of rooting for the guy who really figures out the rocket that can re-land itself. So I would, one of the things we don't talk about kind of internal strategies too often, in terms of whether you're going to hold a USDC or a USDT, or do you go into this peg or that peg. It's not. We try to focus on longer term interest in the venture sector again, which is not. You want to be in as little USDC as possible. You want to be, or USDT or whatever. You want to be making investments frequently, I guess is the basis of that point. It's like if you got USD anything, you're not investing. You should be investing more. If you need more, you can raise more capital through some type of mechanism if you're managing a fund. So part of their interest is, okay, well, what does a successful idea look like way before everyone else recognizes what that successful idea is going to look like? We were early with Bitcoin. We just didn't manage an enormous amount of capital, and I actually live quite a modest life. I don't need it to blow up too crazy. Although we're taking some swings at some much bigger batting averages this last year, which has been fantastic. I think part of it again is measuring into your life what interests you, and then building a long-term investment horizon around that. Because if you don't have a long-term vision here, you're going to get wiped out in the emotionality of a trade, when you could have done extraordinary as an investor. And that's really just kind of sad at the end of the day. Most people, after they realize that they could have made more money by doing nothing, they just don't ever come back, because it's kind of degrading to think all you had to do was spend like $1,000, try something ridiculous, buy some Bitcoin, and then walk away for like 7 years, and it would have outperformed most of the other things you could have invested in, all of them basically, right? So that's a profound statement. So what we're looking to do is make as much money as possible by doing the fewest amount of things between here and 5 to 10 years from now. Get a few good investments and just basically do nothing. Growing a portfolio like that is actually quite easy. And then as you find the winners, you increase conviction by increasing your holdings effectively. So, we've been extremely excited about Bitcoin more than UST. I think what people need to recognize is that there will be a day when something like the US dollar probably can't hold its weight anymore, and we start to see the gauges just flicker around in all ups and downs. So here's the macro story with Bitcoin all the way back on the far left-hand side at the beginning of the bull market of 2017, marked by this little blip of green on the left. This is where you could have been buying just 5 years ago. That's not very long ago. Had you just kept a strategy, yes, had you bought the top of 2017 but continued to buy all the way throughout this cycle, you would have done extraordinarily well. And the problem is people get too excited. They're like, "Oh yeah, you should have sold everything, huh? You didn't buy back. Oh my God, see, it's going to 3,000, blah blah." And then they don't exist anymore. Largely, those players get wiped out. But if you stay consistent and you just kept on buying frequency, now again, this doesn't always work. We were looking at Netflix the other day. And we used to use Netflix as an example, although it was Netflix as an example from its birth, not from just the last few years. So it was a bit of a longer time frame. But here, had you been an investor in Netflix anywhere between 2018 and today, you're underwater. And this is a big player in the sector, right? What is that? Of $8.48 billion in volume here. Wait, 4 billion, no, in shares. So even more than that, it's significantly higher. So nonetheless, you have effectively a blue chip stock down below multiple years of buying. Where had you been buying Netflix only, if you hadn't taken profits up here, you're underwater for all 5 years of buying, right? That's horrible. So there are some places clearly where this is not going to work. You want to be earlier. The earlier, the better. This is why we like venture capital. We try to be as early as possible. It gives us as much time as humanly possible to assess the situation and also to build conviction. You could have bought $100 of Bitcoin first to begin with. And largely, I think this is what people do wrong, is they underestimate the potential of asymmetry when they're making small investments and overestimate the potential of it when they're making large investments. Yet this idea of winning an enormous amount while only losing a little, I repeat frequently, yet I don't think everybody understands it. You say, heads I win, tails I only lose a little. Okay, well, what does that mean? And I think most of you after this evening have graduated. Yes. I think most of you have graduated through your first bear market, or your first kind of bull and violent to the bottom of the cycle bear. I actually, let's go back. I think this is the bottom for Bitcoin pretty much. We could still see it dip a little lower. There's a pocket for 27. Sure, why not? But I think this 3 peaked in a domed house thesis is going to pay off. I just don't see an asset that's more functional at a global scale than Bitcoin right now at all. And I don't know where another one would come from. I don't see the central bank digital currencies really catching on. Bitcoin's already a global bank working perfectly fine 24 hours a day, 7 days a week. It's working. That's insane. I still don't think the gravity of just that alone has really settled into the markets. Yeah, okay, the money's volatile, but who cares? So is the US dollar. And so is the UST, apparently. Algorithmic stablecoins, sixth time was the charm? Shit, no. Okay, so we're going to severely need to rebuild how an algorithmic stablecoin might work, because that is definitely a conversation that we have not solved. So I will commend to that one. Take a look at the chats here. Let's see. Oh, by the way, remember to go ahead and give us a little subscribe down here. That's where it is. Bing. Helps grow the channel. Continue to rant here and share my thoughts for whatever that's worth. I also just like to do it. Actually, primarily, I think some of you find a lot of value from it over the years here. I'm definitely, let's take a look at some of these things. Yeah, macro doesn't look good. I agree with this, but I don't, if we start to starve the markets, if the Fed chooses to, because it definitely can just do that, we could see a type of malice into the market that is hard to understand. Yeah, because all the Fed would have to do is basically stop creating capital, and most of the world's economic vehicle would come to a standstill, like a screeching halt. There's not enough capital to keep moving around on a day-to-day basis just to keep the story as it is going. And hey, maybe they want it to fail. It's also why I live out in the middle of nowhere with private little well. Um, Sell UST now. I tend to think that making emotional decisions in them is not usually a good choice. That would have been too bad to be in UST. I guess when someone asked me the question, I should have been more like thoughtful about the likelihood of a algorithmic stablecoin not working. It's like we know all of them failed. That one I was excited about. I was too excited about that. I'll own up to that for sure. I was way too excited about the algorithmic stablecoin. My true love is still Bitcoin in terms of like, hey, let's have a sovereign money. I don't care how stable it is, just that alone. So AXS analysis, actually, across the market right now, again, this is what's the most exciting, is that this is really resetting a lot of the market. Like, boom, look at Axie down 84%. Boom. Yes. See, this is great. Resetting of the market. It's exactly what we need. The rest is venture capital. Bitcoin still looks strong to me. The rest of it is venture capital. This is, I think, is just a normal day in the ups and downs of a small and liquid markets. Link at $8. Yeah, great. Yeah, Link was just on an absolute tear to get to where it was today anyways. And there's a lot of, clearly after this last year, there's a lot of room for potential competition for Link as well. It's not the only player at the game. The Fed rug pull for the ultra rich. Yeah, it's kind of an interesting sentiment, right? It's like, okay, well, hold on. If they start raising the interest rates, most people that are in debt are going to be screwed. But anyone who's got a bunch of capital, like, could you imagine if they raised the interest rates to 12% and you could just lock up your US dollars for 12% in their little central bank digital banking system, right? Everyone would flock to that probably try to flock to that real quick. So the game is on, ladies and gentlemen. I'm not particularly worried. Again, I'm going to stand by my thesis here. I think we're in a reaccumulation pattern. I think this reaccumulation pattern is going to be a strong three peaks, domed house reversal, and then outwards, upwards, and onwards for a longer bull market than we've ever seen before. So I'm not trying to sell you hopium here. That's my thesis. I also give that thesis bearing a disclaimer. Again, we know these things are volatile. A, that's why we like them. B, we always are managing risk through consistency in investing, not just all at once. Today's the best price, tomorrow is too expensive or over. No, it should take time to build conviction, especially when you're a new investor, because there's so much to learn, especially about being patient and building a portfolio. Yeah, people get people start to become very emotional when it has to do with what appears to be large sums of money changing. Well, they are large sums of money. I guess it's how you view a portfolio. It's a difficult kind of thing to do. Most people don't look at their house and go, hey, my house is up 30% today. I'm just going to flip this house to buy another house to flip it. It doesn't have the same mentality of like the holder. The hodler of a house is usually already locked into a 5 or 10 year type of, okay, I'm going to live here for a bit. I like the area. It's got great access to the beach. So there's a bit of a different mentality when it comes to property. Yet you don't look at it the same. Let's say you own $300,000 in Bitcoin, equivalent to a decent house. Now that Bitcoin could fluctuate wildly, right? It could go from $300,000 to 2 million, back down to 180,000, up to like 5 million in the course of 3 years, and beyond. That's actually a small comparison. So because of that, I think it so easily pushes the average participant out. And that the capital that's generally needed to play in these markets is so large that the only ones who do well are kind of like the BlackRocks, State Streets, the people that have so much money that they can just move into and or out of a market with very little to get in their way. Now, again, the downside comes if there's ever sell-off. And this is one of the really unique times that we're in right now. Is what is the Fed going to do? Are they going to absolutely destroy the market, pretty much destroy every third world currency in probably pretty short order. I don't think too many of them can hold on for very long. We see pegs break all across the world. The lira was pegged. The Costa Rican colone has lost 30% of its value. It's supposed to be pegged too. Go look what's actually here. Let's go back to the Sri Lankan dollar versus the US dollar for fun, or Sri Lanka rupee to USD. Okay. So if you look over the last year here, there's a subscribe thing on that screen. There we go. They went from approximately 0.005, dipped all the way down to 0.0028. It's actually larger than this. This is just the FX currency. If you're on the ground in Sri Lanka, you would actually get half as good at this rate. So it's actually even worse on the ground. And this was supposed to be a peg token as well, effectively. And look at the drawdown. Trying to peg things to US dollars and work well. They've been really good at inflating the out of that thing. And none of these individual countries seem to be able to keep up. So as the US dollar puts this pressure on it, they're going to put pressure around the world on other emerging economies. So let's take a look at USD to CRC. The local Costa Rican colone is up at 663. You take a look at the last year, it's like this steady up. And this is another supposedly stable pegged token. This is supposed to be pegged to the US dollar. What is it doing? It's not pegged. Doesn't look pegged to anything. The Russian ruble has been performing well. Oh, actually, that's another one to take a look at. Russian ruble to USD. Let's take a look. Holy poopy doop. They said that the ruble dropped a bunch. Remember when all that media and news came out? Like, oh, look how bad the ruble's doing. It instantly fucking recovered. Jesus Christ. That was an instant recovery. It's even higher than it was before. That's amazing. They empowered Russia's currency. Although if they cut them off from US dollars, I'm not sure what type of currency war that this might try to start. But this is the type of stuff that should be more worrying to people. It's like, hey, look at the relationship between these underlying currencies. They fluctuate wildly to begin with. So this is, I think, the choice of the future money of the world. So keep that in mind. Everything else, again, is venture capital. We expect it to be volatile. Again, build conviction through time. It makes a huge difference. Take a few more thoughts. Ty says, hey, Tio, I'm back. How's my timing? Good. It's a great time. People are very scared right now. Let's take a look at a few of your guys' thoughts here. When is the tokenized market? I'm not sure what you mean, though. Oh, the stock market. Yeah, it could be done. Murphy's Law says if something bad will happen, it will. Awesome. We love that moment. Gold-backed ruble now. Oh, yeah. Yeah, so interesting. Great to see them make a smart decision. Oh, yeah, I don't think we should be at war with Russia or any means. I mean, it just doesn't make sense. A lot of it doesn't make sense. Hold on, I know nothing about geopolitics, but surely just trying to pick fights with everybody is not a good way to go either, even if they're starting fights with everybody. Like, we just always be starting fights with people. CBR says you've been investing since the high. Again, you got it first off. Build conviction through time. Like, know that a few years should always be on your time horizon. The first sentiment. But if you're following a strategy, it usually pays off really well. Much harder to find people that are unsuccessful by doing that. Michael Buck says, I've been following crypto for 10 years and investing for 5, and this is by far the worst crash I've ever seen. It's a total bust, and I don't think this is the worst crash we've ever seen. This is actually quite normal. This feels totally normal. I actually got excited as I started to see the price go down. It's like, yes, that means we're much closer to the upside that we're looking for. Will this be a shorter bear market than the previous cycle? Well, we went over this yesterday, but from the previous cycle high to where we would be today, this is the lowest point of the market in 2017 was around 380 days. Yeah, I stand by the three peaks domed house theory. I do. I think it turns around. Yeah, it could come a little bit lower still. We already measured down for like 12 to 15% drawdown below 29% potentially. That's fine. But I think it turns around after that and goes real fast. And it's not hopium. You got to do your own thing. I'm just telling you what I think this technical chart says. And we won't know. And if I'm wrong, okay, I was wrong. Strategy still works. But I think we're getting a really unique signal here that's actually quite powerful. Not ever sure what happened to Alley Cat. Good question. That was a long time ago. That was like the very beginning of the bull market in 2017. Good memory, no name. My last year's worth in this. Yeah. Yeah, the fear is a good one. It's a powerful emotion. Anyways, we're going to leave it it's late here. Bear family, I'm still quite confident. I wouldn't worry too much, especially if you are following like a good strategy. Again, if these are all lessons as an investor, you're dealing with one of the most potentially enlivening markets out there for the next decade. I don't think that this stuff is going to settle down. It for the last 10 years has blown my mind, and I don't think it's going to stop. So be patient. We'll see you guys again on the next episode. Thanks for joining us this late. We appreciate you guys. We'll see you on the next episode. Oh yeah, there's an outro button.